Morning traders, it's the start of the new month and volatility is back in focus. The US dollar is holding near recent lows ahead of Friday's key jobs report. Oil prices drop sharply as supply concerns ease while gold consolidates after testing all-time highs. The Australian dollar is finding some support from strong CPI data, so let's break down the key market setups this morning. First up, let's have a look at the US dollar index, which is under pressure, trading near 99.4, shredding over 4% just in April, which is the worst month in nearly 18 months. The recent dollar weakness has been driven by softer economic data, falling treasury yields, and growing rate cut bets. Technically, the DXY is holding just above 99.2 support, but momentum remains bearish. The RSI sits at 37. Which indicates a lack of buying strength, while the MACD is deeply in negative territory, showing persistent downside momentum. The index is also trading below all major moving averages, which is the 20, 50, and the 200-day moving average, which reinforces the bearish bias. Immediate resistance is at 99.47, followed by 99.84. A push above 100 would be needed to shift sentiment. If pressure persists, look for a drop below 98.90 and then the key level of 97.91. Next up, let's talk about crude, which fell over 3% on Wednesday, with WTI slipping below $60 after Saudi Arabia signaled production hikes and OPEC discussed increasing supply ahead of their May 5th meeting. Combined with concerns about slowing global demand, this dragged oil down over 18% in April. On the charts, WTI broke through support at 61.35, the 38.2% Fibonacci level, from its recent 71.98 to 55.78 decline. Momentum indicators are weak. RSI has dipped below 40 and the MACD is showing fresh bearish crossover. Price action is trending beneath the 9-day EMA, suggesting continued pressure. Support lies at $58 with a break below, opening the door to 57.66 and possibly 54.78. On the upside, $60 is now resistance, followed by 61.35 and the 20-day moving average at 62.07. Next up, let's talk about gold, which retreated slightly on Wednesday, pulling back to around 32.90 after last week's record-breaking surge towards 3,500. Easing geopolitical risks and short-term profit-taking are behind this correction, but long-term bullish drivers like the Fed rate cut bets remain intact. Technically, gold remains in a consolidation phase after its breakout. RSI is cooling off, but still in above 55, which indicates a mild bullish momentum. MACD is flattening, signaling indecision. Price is holding above the 32.60 support zone and close above 33.53 would signal a possible retest of the new highs. Key support lies at 3300 and 32.60. If bulls step back in, watch for moves towards 33.68 and 3400. Overall, the bias stays bullish while gold is trading above 32.60. Next, let's have a look at the Australian dollar, which is pushing higher, trading near 64 cents after a hotter than expected Australian inflation data. Q1 CPI came in 0.9% Q on Q, which is well above forecasts, which adds to the speculation that the RBA may need to remain hawkish. This helped the Australian dollar gain, even as China's PMI data disappointed. From a technical view, the Australian dollar is still above its 14-day SMA at 63.75 and RSI is trending above 55, showing healthy upward momentum. Price needs to break through resistance at 64.49 to extend the rally. A close above there opens doors to the 64.62 mark, which is the 200-day SMA, and potentially 65 cents. But if the bulls lose control, support sits at 63.75, followed by 63.02 and the psychological level of 63 cents. Well, that's it for today's morning market outlook. Keep your eyes on oil's response to OPEC's chatter, gold's consolidation range, and whether the dollar can defend support levels ahead of Friday's NFP. As always, manage your risks, stay informed, and I'll catch you in the next one.